Alright guys, so this is part 2 to the Pyxus International stock analysis. I will go ahead and have a link come up right now if you have not watched the first part yet. But in this video guys, what we're going to do is we're going to analyze Pyxus more fundamentally, and we're also going to be comparing it to Tilray, because Tilray is its most natural comparator, and I would also say it's its most natural competitor too, in certain types of ways. Okay, so let's just jump right in. As you can see, they both traded very differently today. Okay, so Pyxus stopped at $38.91 per share today. It actually lost close to 10%. And Tilray had an awesome day. Okay, so Tilray traded up $17 during the trading day, and they're also up about $3 in after hours. They're close to touching $170 a share. So that's interesting. Both of these companies traded very differently today. So let's take a look at these companies fundamentally. Okay, so let's start right up here. It has a $422 million market cap. And like I mentioned in the first video, there is a lot of analysts that believe that this is incredibly undervalued, okay? And so they have a trailing PE of 4.62. That would suggest that it is heavily undervalued. Of course, they don't have a forward PE. In a 52-week change, like I said, it has not been on the New York Stock Exchange long enough for it to calculate that. So right here guys, I have the same information pulled up for Tilray. Okay, so Tilray has a $15.43 billion market cap. Now most analysts believe that they are dramatically overvalued right now, that the stock price and the movement of the stock does not accurately represent the real value of this company. Okay, and no trailing P, a forward P of minus 920, and you know, some of these numbers here are just absolutely ridiculous. You know, like their enterprise value 493, their book value 352. Some of this stuff is just complete nonsense because, like I said, Tilray is very still fundamentally scrutinized, but the stock has moved so dramatically since it came onto the NASDAQ. Okay, in 52-week low, it was as low as $20, and in 52-week high is $300. Okay, now we're back on Pyxus. So the share statistics, I think it is very important to talk about a couple of these numbers in here. Is that the short percent of float as of September 27th was 11.5%. and the short percent of shares outstanding is 9.76%. So about 10% of the overall shareholders are holding Pyxus short. Now they do have, this is right here guys, this is where they really outperform Tilray in my opinion. So they have a 4.53% profit margin, 5.98% operating margin, a 3.39% return on assets, and a 36.24 return on equity. Those are actually very good numbers. Very clean numbers for a, like I said, a company that is in this speculative of an industry. Okay. Now here is the same information for Tilray. So as we can see here, the short percent of float is about 14.66, and the short percent of shares outstanding is about 2.55. Now, my opinion, I think you would be crazy to short Tilray right now, especially this week while we are moving towards the legalization in Canada. I think you would be absolutely out of your mind to try and short Tilray this week. And but right over here, the profitability is not profitable at all. A minus 69% operating margin, and then like I said, they are not available on return on assets and return on equity because they're so unprofitable. Okay, so that, like I said, that is one area where Tilray is, like I said, you could really get the stock price does not give this company a fair valuation at all. Is that the stock price is running and the company is so unprofitable. Okay, so what you're doing is you're buying into the vision and you're buying into the future. You know, and you're hoping some of this cleans up over the course of time. That's what you're buying into with Tilray. Now moving over here to the income statement, they have $1.86 billion of total revenue. They have 5% on their quarterly revenue growth. Okay, the gross profit margin $246 million. EBITDA is $146.85 million. Okay, and they do not pay a dividend, so none of this stuff is going to show up. Looks like the last time they paid a dividend was in 2005, and they were actually under a different company's name then. Then rounding out here, guys, down on the balance sheet, $202 million of total cash and $1.49 billion of total debt. So that right there doesn't really bother me too much, considering they are shifting into the marijuana industry. So they will have an opportunity to pay a lot of that debt off, probably get more debt, but also get more cash and become a whole lot more profitable. Let's see here. They have a negative $14 million of operating cash flow and a negative $25 million of levered free cash flow. So, from a fundamental standpoint, Pyxus is actually a lot healthier of a company than Tilray is. Of course, Pyxus is more of a tobacco distributor, where Tilray is your more like one of Canada's biggest marijuana growers. So here we are, guys, back on Tilray. We'll look at their income statement and balance sheet. Obviously, we'll just start right here. They don't pay a dividend, so there's nothing's going to show up there. But they have a $28.07 million of revenue, and then a 95.2% quarterly revenue growth. Okay, so that's actually a real positive thing. But now their EBITDA is minus $17 million, and their net income AVI to common is negative $22.69 million. So again, there's still a lot of negatives hanging around in there. Down here on their balance sheet, $25.33 million of total cash and $54.74 million of total debt. So Tilray actually gets the nod here. They have a lot better of a ratio there. And, you know, their current ratio is a 0.62. That's a lot healthier than what Pyxus has. But negative $6.1 million operating free cash flow. So they're both negative in that area. And so let's just briefly touch on the charting again one more time. I did cover this in the first video. But as you can see, Pyxus has only been trading on the New York Stock Exchange since September 12th. And it has seen, like I said, from down here in these $18 to $20 range, it has seen a well over a 100% return, like I said, in just about a month's time. Okay, it would actually dip down about 10% today. So it might be a good opportunity to buy into it, buy in a small position if you're in the market for one. And then of course, this is Tilray. Okay, so Tilray has had some gains like I have never seen before. And you know, like I said, well over 1,000% return from when they were in the $20 range. Actually, it's probably closer to 1,500% return if you want to count their all-time high at $300 a share. But even since their big dip at the end of September, they've recovered nicely, and like I said, up to $168 in aftermarket today. So Tilray has really performed well. Like I said, for a company that has not had an earnings report yet, and for a company that we still know so very little about fundamentally. So that's another thing too, guys, to keep in mind, is that neither Tilray or Pyxus has seen a quarterly earnings report yet. So we can't fairly justify any of these numbers. We can't really give them a spot in line. I know I'm probably going to get comments about some of these figures are inaccurate, but let's face it, all these figures are inaccurate on both Tilray and Pyxus, because like I said, neither one of them have had a quarterly earnings report yet. We can take a quick look though at Pyxus's income statement, and like I said, they are about in the same place they were 3 years ago. Okay, roughly. Okay, so they have not grown a lot in gross profit. And then, operating income pretty much has run sideways for 3 years now. So not a lot of growth there. Now, the net income from continuing ops, that has actually improved a lot over the past few years, where it's positive now. And then net income applicable to common shares, that has also improved a lot. So it looks like they were negative, then they were highly positive, negative again, and now they are back positive again. That is of March of 2018. And so again, guys, I just want to also, before we wrap up today, mention this news article here that long Pyxus International with a short-term price target of $65. So Altria is in talks to buy stake in Afria, which shows the maturation of legacy tobacco. Pyxus International is set to be the greatest beneficiary of this. And you can go on to read this article more and see how, Pyxus, having a stake in those companies, guys, could really actually be a great benefit to Pyxus, and how they can benefit from the tobacco and marijuana industry. So they'll kind of have a horse in both of those races. I will link this article up down in the description box if you would like to continue reading on it. So am I calling Pyxus a buy? Yes, I am. Like I said, this is not a position I would want to put Google money in, or Apple money in, or Amazon. And like I said, make sure all of your big investments are, dominating your portfolio. This would be a very speculative investment. But yes, I am calling Pyxus a buy. And I would have no problem with you or me or anyone taking a position right here on this 10% pullback. Thanks for watching the video, guys. I hope you found it useful. Drop me a like, subscribe if you haven't done so yet, and leave me a comment. Tell me your thoughts on Pyxus. I'm curious to hear about that. I hope you had a good day on the stock market today, and thank you so much for watching the video.